Frida Leibowitz is the CEO of Debbie, an innovative rewards platform for debt payoff. She co-founded Debbie after 2 years at Goldman Sachs, where she led cards product and consumer loans credit risk of Marcus, Goldman's digital banking platform. Frida's result orientation and strong leadership skills help drive substantial improvements for Debbie's clients.
So, hello, FinTech leaders and builders. Today, this is our next episode of God's Grit and the FinTech podcast. And this is the show for strong-minded entrepreneurs who are not afraid to transform the financial industry, who are not afraid to take the risk to get the rewards and to build the brighter financial future. And I'm Vasyl Soloshchuk from INSART, and we're a FinTech engineering startup studio and innovation lab. And today, I would like to present you a very great guest, Frida Leibowitz from Debbie. So, Frida, hello.
Hi, thank you for having me.
Yeah, thank you for joining. And let's talk about what you're doing as a founder, entrepreneur. So, can you tell us a bit about your background?
Sure. So I started my career actually in fintech, but at a large bank. So I started my career at Marcus by Goldman Sachs. This was back in the very early, exciting days when Goldman just started building this consumer digital bank and had this vision that they were going to build like the Goldman Sachs, but for the average American. I love that vision. I really was. I had a sweet spot or a soft spot for building something for what I viewed as the average American because that was my family. And so, yeah, I joined them. I joined on the credit risk team. So I was primarily working on loan products, a little bit on credit cards, and spent a lot of my time in building risk models, pricing models, and trying to understand consumer behavior around credit, loans, and specifically around debt consolidation loans. So that's where I, started my career with the passion to help people break free from the debt cycle. And then eventually got pretty frustrated with what I saw in the market. And so, went rogue and went to start a company.
Yeah, so I see that this is a pretty typical scenario. So when you work for the big bank and you see some problem and you try to solve this problem, and eventually you end up being a founder of a new company. So can you tell us why exactly did you decide to start the new company?
Yeah. So my why actually starts way before I started the company. It was even like, why did I even get into the space to begin with? I wanted to solve, like a good millennial, I wanted to work on a problem that I really understood and cared about. And for me, I grew up in an immigrant family that always, that was not college educated, that always struggled with just like really poor financial incentives. I think that the financial system today does not present very good incentives for people who are in the lower socioeconomic status, which is most, right? We know that, the best example of incentives in financial services is credit card rewards, which reward you for spending more. And then we now have all of these like not great options, like, taking on more and more credit. Buy now, pay later is made easier and easier for people to just buy things they can't afford, which is framed to us as like, oh, this is good. This is good for the poor people. But as coming from that place, I know that it's not good. It actually makes you make, not great decisions. And for my family, it meant living in a constant cycle of debt, paying very high interest for everything. Everything we bought was on credit. So everything we bought, we paid a lot more for than what we should have paid for. And that really barred us from achieving financial security. And so when when I got very lucky and ended up getting a scholarship to NYU, went to study finance, got to live the American dream of being that first person in my family to go to college and getting all these opportunities, I wanted to go work to solve this problem. And so that's why I joined the industry to begin with. And then like you mentioned very correctly, like many other entrepreneurs that I find, you are passionate about solving a problem, you try to solve it from within, and you realize that it's not going to happen. So you go out and build it on your own.
So how would you define exactly the problem that you're trying to solve, and who are your clients?
Sure. So the problem we're trying to solve is, I would say, poor financial behavior resulting from poor incentives. And I think that's actually, we're a B2B2C solution. So we have sort of problems on both sides of the spectrum. So I'll talk first about the consumer side of things. For consumers, I'm talking about, like I said, vast majority of just the average American family. Really, we're focused more, I would say, even on millennials. And for them, the problem is that they're struggling with poor financial habits, right? They're spending too much on credit. They're carrying credit card debt. They're not putting enough money in savings. They're not managing their spending well. Budgeting and all these, like, financial literacy solutions are not really working for them because they're not targeting the underlying root cause of the problem, which is behavior. You cannot automate away behavior. You cannot throw more cash at it with cheaper, better automated financing or whatever, right? And so that's really the problem that they're trying to solve. Is like, how do I build the discipline and habits to get out of this cycle that I've been struggling with for a while? On the on the B2B side of things for financial institutions, we're trying to help them figure out, how do I get better performance for my products? How do I build loyalty? How do I think about attracting the next generation of young consumers in a way that is more consumer friendly? Because if I don't do that, I'm not going to be differentiated. I'm not going to, like, right. Consumers are picking up on the idea that of which financial institutions are not really on their side, and that really costs the banks and financial institutions in loyalty and performance and other areas. And so that's really like the two, I would say, complementary problems that we're trying to solve.
So, which of these segments of clients is more hard to acquire? So, are they more banks or the consumers? Because it looks like you're trying to tap into both segments of these clients, consumers
Yes.
and banks.
Yes, great question. And by the way, like, I would say, I more than banks, we're actually working primarily with credit unions now. So, and credit unions
Okay,
are not banks, which is interesting. So I would say
okay.
more broadly financial institutions. I don't know that I would say one is harder than the other. They're very, very different. So it's not really a comparison. I think
Mm-hmm,
on the consumer side, of course, like, we can scale a lot faster. It's a lot,
mm-hmm,
the that part is, we've got the messaging down pat. It's a very easy value prop to the consumer. Our like kind of biggest, like, marketing, our best marketing line is just get paid to pay off your debt and save. And
mm-hmm.
consumers love rewards. They love free money. So that piece works, and they also understand, like, okay, this is going to incentivize me to build better habits. Um, on the community bank and credit union side of things, I would say it's just, traditional sales cycles. They're moving fairly quickly, a lot faster than the big banks would. Um, but just a different set of challenges in terms of, approaching larger, old school, sometimes old school clients, sometimes more innovative ones. But that yeah, different set of problems. I don't know that there's like a good comparison between them, like which one is harder. uh,
So, who did you find the best credit union for yourself? Any specific parameters?
how do we find the ones that fit for us?
Yeah,
So
I mean, who is the best credit union? I mean, there are like local,
yeah,
global, somebody with like some more specifics on what type of
credit
credit
unions we
unions
work
work
with.
for you
Yeah.
best.
So we right now, when we do our evaluation of how, like, we have lots of leads, we talk to them, but we do a mutual evaluation process, right, where they get to
Hmm.
evaluate us, of course, to get on the platform, but we also evaluate them. And for us, what's been really, really important, is first of all, being very member oriented, which credit unions already are. So that was great, right? Really understanding, like, that this is about the consumer and caring about their well-being and all these things. But the other part is that they have to, I kind of have this line out that I tell them all, is that they have to have their plumbing set right before we can invite people to their house. So we will test their plumbing. Plumbing means that they have to have a good digital experience, which in the credit union space, that's, if you're familiar with it at all, you know that credit unions are still very, very behind the times on where to, with their technology. And so they've got to have a decent digital experience, a good onboarding experience, that is somewhat automated, if not entirely automated. And just, like, very clear criteria on how to get members in, and a good experience there. Like, the whole onboarding and post onboarding digital experience has to be there. for us to be able to work with them. So that means, and the types of credit union that can have that, it actually really ranges, right? It can go anywhere from like your huge ones, like a Navy Federal, Penn Fed, like those huge ones that we are hoping to work with one day, but also to really much smaller. We've kind of found a lot of these like
Mhm.
small but mighty credit unions that are doing amazing things, that are innovating, moving fast, and kind of operating almost like the startups of credit unions.
Mhm.
So those are one of the ones that we're talking to that's very innovative is Lafayette Federal Credit Union. We actually work with them; they're one of our customers. Another one, so they're relatively small. They're based in Maryland, and they're trying to grow, and they're being aggressive, and they're just like trying to innovate. And then we have a somewhat larger credit union called Michigan State University Federal Credit Union. They're actually known to be like one of the most innovative credit unions in the industry, and they are, again, like I said, slightly bigger, like 8 to 10 billion AUM, and more, and really, really focused on financial on digital innovation.
Yeah, and by the way, I'm seeing more and more startups that innovate with the onboarding process because it's a really redundant and legacy one. But this is totally different story still. Uh, so how would you define your competition? So who would be your competitors, and how would you differentiate yourself from them?
Yeah, great question. So this time I'll start with the B2B side and the credit union side. So what has been like the biggest challenge for credit unions so far, right? So like I mentioned before, is building that loyalty, especially with a younger consumer. Credit unions, if you know anything about them, right, they're not for profit. They really care about their members. They have that value prop that they are always putting their members first. But they have not found a good way to do that digitally and figure out how to build that engagement, that trust. That's kind of been a big challenge for them. And what does that translate into? That means that they have a very hard time acquiring new young members. And even when they do acquire them, they have a very hard time retaining them, right? Actually getting them to use more of the credit union's products. A lot of times what will happen, someone will come for a very specific purpose, for a loan, usually an auto loan, take out the loan, pay it off, never do a business with that credit union again, right? And that really
Mhm.
ruins like the whole kind of the point of having the credit union model. And
Mhm.
so over there, there's been a lot of solutions around, like a lot of white label solutions. So a lot of solutions came to credit unions in the past and said, hey, we're going to build these like really great tools that you can embed in your app. And you're going to have all this like either financial literacy built in or dashboards, like with all these like, credit score simulations and all these things. That really hasn't worked very well until now because credit unions are just not able to get that engagement to begin with in their app, right? The branding, the marketing, everything around it is just not there. And it's also been very hard for them to really correlate that or have a direct tie between that and actually like, what is the ROI there, right? How do you measure what you're getting out of it? And so that's where we came in and we said, hey, we're going to take a completely different approach. We are not white labeled. We are co-branded. So think about us a little
Mhm.
bit more like the Built rewards for credit unions. So if you know about the Built rewards program, right? Like they came out with this awesome value prop for consumers where they can earn rewards for paying rent, and they're working with Wells Fargo. Now, for Wells Fargo has had a very hard time competing in the credit card space, right? They don't have
Mhm.
any sexy, cool credit cards the way that Chase does and Amex does, and even Capital One. They couldn't get into that space. So for them, Built was a great way to get access to this young demographic of renters, and they're keeping in mind that down the line, well, they can do mortgages for them. And Wells Fargo used to be one of the biggest mortgage lenders, and I think they're trying to make their way back to the
Mhm.
top. And this is a great move for them. Same thing for the credit unions is what we're doing. And so like I said, the white label solutions there is what we're trying, like that's usually our competition and what we're trying to replace, and also educate the credit unions about why it helps them a lot when we bring our brand to the table. And then on the consumer side of things, I think we usually get compared to, like I said, either financial literacy apps that are just purely financial
Mhm.
literacy, or some of these other, like a Tally or debt consolidation loans or things like that. And for consumers, the biggest differentiators are number one, earning rewards. No other program that I've seen gives you cash rewards for good behavior. And two is the behavior focus, right? We we have education on the platform, but we almost don't do any of the traditional financial literacy. So we don't really do what's APR, what's compound interest, all this stuff that we found
Mhm.
boring and not very helpful. Instead, we actually educate people a lot more about the psychology. So even things like the book you have behind you, right? Like Good to Great, like we take like behavioral psychology concepts and educate consumers about that, right? How to make better decisions, how to, when you're standing in Walmart in front of the bigger TV and the smaller TV, and you know you really should get the smaller one because, even though you can finance the bigger one with just $100, a month for 12 months or whatever it is, not the right decision. Like, so how to really make those decisions. And that's been a huge differentiator for us.
Yeah, great. So behavior analytics and everything related, like how you can actually help people to make their decisions and actually follow their personal finance routines. It's very important. So thank you for sharing this, Frida. So where do you stand in terms of traction for Debbie? So what kind of results, significant results, have you already achieved? And also, if you can share who are your team members and maybe some other co-founders.
Sure. So in terms of traction, we have 3 credit unions on the platform so far. So 3 customers. They've been amazing. So 2 I mentioned already. So Lafayette Federal Credit Union, Michigan State University Federal Credit Union, and Community Financial Credit Union, also out in Michigan. We've got a pipeline of 50 additional credit unions that we're talking to, and like things are definitely moving quicker now, and there's kind of been a lot of excitement around that. In terms of results, the most important thing is that our users are 3 times more likely to make their payments on time. We see a 35% reduction in number of missed payments when we compare the same population. We look at them before every time they join the platform. We get a 2 years history of their transaction because they'll add their accounts via Plaid, and we literally track them, and we saw a 35% in decline in number of missed payments. So very, very positive results there. And we also saw a really great growth in deposits. With one of our credit unions, we were able to increase their deposits growth rate by 2x, which was huge, right? So now their members were all of a sudden, they became top of mind. Their members started doing more transactions, moving more money over to the credit union. And that's kind of like a big focus for us. And of course, like that, it's great that ties to the financial wellness, right? If someone is depositing more money, it also means they're saving more. They're building themselves like an emergency fund, a rainy day fund. So that's really great to see. And yeah, all of this would never be possible without our amazing, incredible team. First and foremost, is my better half, my co-founder. She is amazing. Her background is she started off on Wall Street as well in traditional finance. So she was at Credit Suisse, and then she moved into venture capital. We knew each other from college. We were good friends from college. And then we ended up kind of like talking through, as we were both progressing in our careers. We were talking through the problems that I was seeing, what she was seeing from the VC side of things. And that's how we started. And then we've got around, I think, 7 or 8 other amazing team members. About half of our team is engineering, and the other half is more operations, product, marketing, all that great stuff.
Frida, great results so far. So can you tell me, just to finalize our conversation, so what's the biggest challenge that you're working right now as a founder? And also, what would be your several next strategic moves for the next 6 to 12 months?
Yes, great question. So I would say right now, what's interesting, I don't know what the biggest one of the biggest challenges for me as a founder specifically, not just for the company as a whole,
Mhm.
is really, really staying focused. We are entering a space, or we've entered a space with so much opportunity. Credit unions are hungry. They want to do. They're hungry because they're facing an existential like threat right now, right? Like if their average age of a member is 53 years old, that's the average age of a credit union member in the U.S. and it's been going up. So if they don't figure out how to like get that down, right, they know that they might not be around. And they've been doing amazing work, and they're reversing that trend now, which is awesome to see. Like Gen Zers are actually have higher rates of credit union membership compared to millennials. So there's some good work that's happening there. But at the same time, there's like I said, so many areas. And for us coming in here, we have to really figure out what to focus on. And we have to stay very, very focused. If there's anything I've learned in the past, and if there's any lesson I learned from Marcus, which was, if you know anything about that story, you know that it went nowhere very fast, is that doing too much like it will never work. And that's coming from a place, and I learned that at Marcus, which had the unlimited balance sheet of Goldman Sachs. We had unlimited money theoretically. We had so many resources, and we still failed because we did too much too soon, and we could not figure out our focus. And so I think as a founder, it's like my daily challenge. It's like so many opportunities come my way, even at FinTech Meetup, like at the conference last week, like so many different people came to me. Like all of a sudden I started, like debt buyers were coming to me and saying, hey, let's work with you. Debt settlement, like there was all kinds of different things happening there. And we really have to be very selective about what we choose to work on and build next. So that's kind of been the biggest challenge.
Yeah, you always need to prioritize. I agree with you. So, Frida, thank you for being with us today. It was really great to talk with you about Debbie.
Yeah, thank you so much for having me. It was great talking to you as well. And happy to follow up if anybody's listening. More than happy to follow up on any questions you might have. You can visit our website, joindebbie.com. And also you can feel free to email me at frida@joindebbie.com.
Cool. And we will put everything in the description below, so you can, and I encourage everyone who are watching us today to actually visit Debbie and try this great application. And thank you for watching us today. It was me, Vasyl Soloshchuk, and Frida Leibowitz from Debbie. And let's keep building brighter financial future together. Bye-bye.
Still watching us and have not subscribed yet? Let's fix this. Also, don't forget to like this video and take a look at the other episodes we have. See ya!